Well, good evening, everyone. This is Michelle Harden, and I am so excited to be with you on tonight. It is Monday night. This is the night that we use to expand our ministry brand and also Kingdom Talk Today. It's where we talk about money, health, and those things that's going to help us to empower ourselves as entrepreneurs, believers, and just individuals that are trying to grow and really understand um, and overcome some of the hurdles that we've had in life. And so, one of the things that I do know is that money has a lot to do with where we are today. So, the lack of or the abundance of money could both be things that we can learn from what to do with money when we get it, whether it's retirement, whether it's an inheritance. Being able to be prepared for that is very, very important. And then also, when we look at the lack of money, it could be because of responsibility or integrity issues that maybe we've had in the past. We all have had them. And so I think it's a great time for us to, just take a look and begin to explore those things. So my commitment to you guys is to bring you the best who I know tried, proven in the industry to help us to understand this just a little bit better. So tonight we're going to be talking about credit, and we're also going to be talking about how to position our money for a recession-proof income as well as our assets. So I have two amazing people. Can you say amazing? Go ahead and type it in the chat. Amazing, amazing individuals who I have grown to have a high level of respect for. And I'm going to introduce them, and then they're going to share with us just a little bit today. And then we'll come back and give you some announcements. All right. So, what I want you to do right now is go ahead and share this, and connect with other people who you know need this information. It will be shareable on our KingCast, our Kingdom View Network page, as well as our YouTube page. So without any further ado, let me go ahead and introduce our very first guest. Her name is Nico Bell. Nico Bell. Um, and I won't show any partiality, but one of my favorite cousins. But I've been knowing her all of my life and all of her life because I'm a little bit older than she is. But nonetheless, guys, a professional entrepreneur in the finance industry of mortgage. And so she is a loan originator, which we won't be talking about that tonight, but she's going to help us with credit, because credit is a big part of when you're ready to buy a house, when you're ready to make some financial decisions. Your credit needs to be intact. Matter of fact, you're going to learn some tips and tools to be able to help you not affect your credit, even unintentionally. So without any further ado, let me bring up the expert herself, Nico Bell. Nicole, how are
Thank
you?
you. I am wonderful.
Awesome,
Wonderful.
awesome. I am so glad that you are here, glad that you're with us on tonight. And I'm looking forward to, as you have helped me individually, just on a personal side, really understand credit, but then have the tools to be able to share with other people, what to share with myself, how to make a difference and go ahead and acquire, real estate, because of those decisions. So I want to give you an opportunity just to share with our audience and just help us tonight understand credit, and then I'll be back to join you once you're done. All right, go ahead,
Awesome.
take it away.
Awesome. So again, my name is Nico Bell. I am a loan originator, but I am also a credit specialist. So I deal a lot with credit. I've been in that industry since 2000. And how I got into the industry is that coming up as a child, our parents never really taught us about credit. We just knew that, the bills got paid, whether they, once a month went out, got money orders, mailed out the money orders, and we just knew that they may or may not have had a credit card. And we really never understood how credit worked. So that caused me to kind of dive deep into what is credit, how does credit work, and why is it so important. So you could take a person that have tons and tons of money, but the basis of it is that you still need to have some type of credit background. So in speaking with Michelle, I kind of wanted to really kind of cover, because a lot of us know about credit karma. and to kind of deal with why your Credit Karma credit scores are a lot different than what your actual mortgage scores are. And so when you get into credit, you understand that there are different scoring models. So when I say scoring models, you have what is your credit, and when you apply for your auto loans and your credit cards, they base it on what's called your FICO score. When you're dealing with Credit Karma, they deal with what's called a Vantage 3.0. So that's why a lot of you out there with Credit Karma, it may show you have a 700 credit score. Then when you get to the dealership and they tell you you have a 620 credit score, that is why. It's because the scoring models are totally different. So Credit Karma, they basically base their scoring model off of your payment history, your credit utilization, and the balances on your accounts. That's pretty much it. So if you're keeping your credit utilization low, you're keeping your balances low, and a good payment history, you will see your credit scores, according to Credit Karma, you will see them increase very quickly. Now, when you're dealing with mortgages and auto, we basically look at the age of your accounts, meaning how long you've actually had your accounts open. We look at what types of accounts. So you have to make sure that you have the correct mixture of accounts. So you have to make sure you have your revolving accounts, your installment accounts, loans. All of those play in part of your credit scores. And a lot of people don't realize it. So they go out and they get a lot of credit cards, and you're still not reaching where you want to reach in that credit score, trying to get into the high sevens or even into the 800s. And a lot of that may have to do with the mix of accounts that you actually have. So that's one of the biggest things is you have your Credit Karma, which is good strictly for credit monitoring. But if you really, really, really want to achieve those actual scores that really count, then you want to look more into your FICO credit scores. Now, there's two ways you can get your credit reports. You have your annual credit report that will not come with the score, which is just my annual credit report, which kind of break down everything, which probably most of it you won't understand anyway. So that's why I come in and I'm available. My services are at no charge to you, but we can actually go through your credit reports and kind of look at what's on your reports and kind of see what's going on to get those scores up. It could be your mixture of accounts. It's so many things that are involved in that credit score, which is why we launched a program called the CreditUP Clube, which is a amazing, amazing software. I have a ton of customers on this program, and it's more of a DIY. It do not mean that you have bad credit. You don't necessarily have to have the greatest of credit, but this program will actually launch your credit report into the program. It will do an analysis for you and tell you exactly what you need to do with your credit report. Again, that program is called My CreditUP program. And with that program, all you pay for is the credit report, which is $29, and everything else is done for you. You're just responsible for mailing out your letters and making sure if they tell you to open up a credit card with this particular company for this particular amount, then you want to make sure that you follow those directives. I've had a ton of success with that. And that's really the biggest thing about credit is just understanding, one, what accounts you need. Two, if you're going in, which I'm finding a lot of customers are doing, going in and you see that you have collection accounts and you just want to pay them. Remember, we talked about the age of your account. When you go and pay them, you change your date of last activity. So this could have been a 4-year-old account that's not impacting your credit score. And because you went in and paid that collection account, you just changed your date of last activity and made it a brand new account. And instead of you increasing your scores, you just lowered your scores. So there's a ton of things out there that we can kind of talk one-on-one, look at your credit report and kind of go over and let you know what you need to do. So I am definitely available for you. Michelle can share my contact information with you for that CreditUP Club, and we can definitely get you signed up at your leisure. Michelle, did you have any other questions? Anything else you wanted me to bring out?
Yes, this is great. I think one of the things that we talked about when we were wanting you to come on too is we talked about there are so many myths out there about credit, about that kind of cause you to even be scared, even to look at your credit. I know that's a lot of people that I talk to when it comes to purchasing a house, or I asked them, have you looked at your credit? No, I'm scared. So can you talk just a little bit about the myths about credit reports?
Don't try to read them on your own.
Okay.
And generally with some credit, it's just little things that we have to tweak. So it could be you have a 400 credit score. I mean, I've seen 400 credit scores. But it could be little things on it. It could be that we may need to add a secure credit card. It could be that it could be some medical accounts. And most medical accounts, if you pay them, they're deleted. That may increase your scores. But it's so many different variables. It could be that you have a ton of credit cards and you're maxed out on your credit cards, which is affecting your credit utilization. Once we get all those credit cards below 20%, and that's another myth. A lot of people will tell you that your credit utilization needs to be at 30%. That is not true. It just depends on your credit and what your magic number is. I know for me, 11% is my credit utilization.
Wow.
Someone may be 9. It's just going to depend on what your group of accounts are. So that's another myth. 30% is not that magic number for utilization, but you're thinking if I just, get this credit card, keep it below 30%, I'm good. And that's not the case. Another myth, paying off your credit cards.
Yeah.
On a monthly basis. Some credit cards, and I've seen to where I've read in Simulator, and they want you to have a $9 balance on your credit card, and it can boost your score 20 points. So it just really depends on your credit, and then also learning how to work your credit. And I know that Chris is going to get into the money piece of it a little bit later, but kind of learning how to work your credit. So with each credit card, you should know not just your due date, but what is my statement date? Your statement date is important because they don't report until your statement date. Wow. So in order for you to keep your activities on this account, put your utilities on your credit cards.
Wow.
And then that way you're not paying your utility bill and a credit card bill. It's all one bill that you're paying. And then what you're paying attention to your statement date, as long as you make those payments before that statement date, of course, you want to meet your due date, but you don't want to charge again until after your next statement date. And that way, basically, whatever you charge between statement date to statement date will not actually show up on your credit report.
Wow. Now that's major. I think that was a great financial breakthrough right there. I don't think I've ever heard it like that. I've always heard, make sure you pay your credit bill on time. Make sure you pay it on time. And on time is really paying it before the statement date.
It's actually paying it on the due date.
On the due date.
Making sure you have the balance paid down before the statement date.
Before the statement date. So
right.
is that the 30% that you want to keep paid down on any credit card?
30% is not that rule. It's going to depend on your credit card. That's just another myth.
Wow. See? Somebody just told me that the other day. But let me read this to you. I think you'll be real excited about this. It says, "Hello, it's Kathy, the CreditUP Club, and we're working on your credit repair. We were reviewing your credit and noticed that you have two credit cards reporting positively to help your credit score. Credit cards and our revolving credit accounts are worth 65% of your credit score. Car payments and mortgages are installment credit and only worth 10%. We are recommending having between 3 to 5 credit cards open and active. So please get a credit card as soon as possible." What does that say to you when I read that?
You need you need credit cards. People say, "No, I'm gonna close my." I think a lot of people are scared to use credit cards
Yeah.
because you
Chris
have
is
to be
like,
you have to be disciplined for credit cards.
yes.
But technically, if you're not using your credit cards, you're not getting credit for having those credit cards, if that makes sense,
Yeah.
because they're not going to pay to report if you're not using them.
Okay. Okay.
Okay.
Excellent. And it says,
Also, if you go a certain time frame without using them, they'll end up closing them. And you
mm,
don't want to close them because remember, you need the age of accounts.
okay.
So
Wow, this is good. It says, "I recommend Capital One Platinum," which I do have. And I guess it hadn't reported yet because I do have my third credit card because it was offered, and I'm just keeping a low balance just so I can keep my credit going. So they sent this out today. And I'll say, how timely is that? We're going to be talking about credit tonight, and then we actually get this. But this is great information. So we're going to come back to you in just a few minutes. Guys, get ready. We're talking money. We're talking about how you build a legacy for your family, utilizing money that you have. It was so, and I'm gonna bring up Chris while I'm talking about this. Chris, our car is being repaired, right? So we were in an Uber car today. We were in an Uber, and this gentleman had just lost his job making $15,000 a month. $15,000 a month. And so we started talking about finances. And then so he, started asking me like questions like he wants to, start a construction business and things of that nature. But I end up sharing with him, you always want to use other people's money to do your business idea. And so that's something that I just kind of heard you talk about. But guys, get ready to hear for a few minutes from Chris Richardson, a wealth expert. Guys, take out your pen and pad, write down this information. I'm sure he's gotten some Holy Ghost notes on wealth. I said Holy Ghost notes on wealth. So thank you again for being with us. I always enjoy and glean and hear, great things from you. I was going to say nuggets, but I don't think they're nuggets, but I think they are divine instructions to help us to begin to take control of our wealth. So go ahead, take it away, and we'll be back.
Awesome. Well, bless everybody. God bless everybody on this call, no matter where you're listening from. So, actually, I want to piggyback on everything that Nico said, and she just dropped a lot of insight. And one of the things that I go back to is the point where she said that a lot of people think, you need to pay your credit cards off, and that may actually not do much as good for you as you may think. One of the things that was really important was she said about maybe keeping a $9 balance, and so being specific about how that credit card company wants you to use their credit card is going to help you max out your ability. And the purpose of actually getting a credit card, guys, actually is not to actually buy something you can't afford. And that's one of the biggest mistakes. So they're basically what I usually categorize is basically for people that have credit cards. And I'm going to tell you, most people like myself, we learn from getting our butt kicked. We learn from getting burned. And I remember my first credit card, I'm 18 years old. I should have had a credit card at 18. I don't think they should even give credit cards at 18. But with that first credit card, I went to GameStop. That's how young I am. I go to GameStop and max that card out with one expense. I remember my second credit card, I maxed it out buying rims on a car. Third credit card, another car, maxing out, you putting rims on a car. So things that we like tend to not have the ability to buy right away. I would say that's the first type of credit card user, somebody who's using that credit card for instant gratification. And it's something that they should not be buying at the time. Like literally, that's the person who shouldn't have a credit card because the education hasn't come yet. And they should not be using a credit card. Number two, The second person who uses a credit card, unfortunately, has that credit card. And when an emergency happens, someone in their family gets sick, someone in their family dies, they got to fly out across town, across country. They got to buy an expensive plane ticket. Something breaks in your house. You thought you had this coverage and you didn't have the flood coverage, and now you got to replace something that flooded, and something like that. You got to use your credit card for that purpose. And that's also something you couldn't afford to just come out of pocket and buy, but you also wasn't prepared for that emergency. So that's the second type of person. But the third type of person who uses their credit card, they're using it and they have a balance and they're paying that balance down. And some of you guys relate to anywhere from the first to the third. You have a balance and you're paying that balance down. But the fourth one, and if you can evaluate yourself and understand this, the fourth one who uses credit, they actually use that credit and they're building that credit consistently. And everything they do is all about maintaining a great credit score and keeping that credit history up. These are people that usually, when people like Nico or some other credit professionals may go and try to enhance someone's credit, like help build somebody's credit, they may go to someone who has great credit and who has great trade lines, and they'll put those guys on that person's line of credit, basically like it's like a trade line, and they make them a authorized user. And what that does, it kind of helps bring that person credit score. But who is that person? It's the fourth person. It's the person who actually had great credit, and they're keeping these things seasoned. They're paying it the right way, and that's somebody who could afford the things that they're buying. And the usual reason for them actually using that credit card is to actually have a great relationship with that credit card company. And what they're doing consecutively is that some of these people in reality, they may actually pay their monthly bills, but they're, instead of using their debit card or cash, they're using their credit card. And every month they use that credit card, and at the right time, gonna probably pay less on stuff overall throughout the year because they're actually going to get reward points. They may fly for free. They may go to hotels for free. They may get a lot of things that are just basic points that they're rewarded for actually having a great credit history and paying on time. And what they're doing also is they're maintaining that anytime anything goes wrong, they always have they're not using their credit card to the max amount. They're basically using what they could actually afford to pay for, and they're not stretching themselves. So basically, let's say someone's monthly expenses is $7,000, and they're putting basically $7,000 on that credit card, but they had that money. That's their monthly expenses, mortgage, everything else, and they're taking that money that they would have just paid in cash, and they're paying that credit card down. Why is that a better way? Because most people in America, let's say you're spending $7,000 a month in expenses. You're in a situation where your expenses are $84,000 a year. And the average person is just letting 84,000 go in their bank, and it goes out to expenses, and it didn't leave a seed. And if that fourth person who understands this, if they're not already doing this, what makes a lot of sense is they found a better way to actually spend their money. Like Michelle just said, you never use your money, use everybody else's money. I remember watching this clip, and it was this guy, he was speaking in front of this college, and he said, all of my adult life, I've never used my own money. Every day of my life, I use someone else's money. And what did he mean by that? He basically uses the bank's money, basically using it through credit. And what he's doing is that he's living off credit. He says, I've never owned a debit card. I don't allow my three sons to own a debit card. He says, I use the most effective payment system that has ever existed, and that's a credit card. And with that, all of his money goes into his bank. And then basically what he does is he puts it in a life insurance policy. Once that money goes into a life insurance policy, that insurance company, let's just say in a year, you put $84,000 in your life insurance policy. But this is the same 84,000 that you would have used to live off. And we're going to play apples to apples in a second. But that 84,000, instead of just going into that bank and just waits to charges to be, collected and ran up, and your debit used, or you pulling out money, or you got automatic drafts coming out for bills to be paid. Let's say that 84,000 then goes into your life insurance policy. Insurance companies basically, if it's the right type of policy, is going to allow that person to borrow $84,000 because they have 84,000 to collateralize. But if that person is doing that, let's say that 84,000 earns 10% in interest in that year, and that 84,000 earns 10%, that's 8,400 that actually created a seed before that money was just spent and it was gone, if that makes any sense. And let's say that person does that for 2 years. In 2 years, here's the example. They've made somewhere around 16 to 17,000 in created interest off of that money that was just a regular expense. But they've learned how to do it in a better way where the money that was just going to sit in the bank, it does nothing for them by the time it's spent. And because they actually didn't take that money and use it the correct way, they didn't actually get a chance to build their credit. So they lost on two components. They lost the ability to create interest from using it in the right point form, meaning put it in your life insurance policy, borrow against it. Most people call this concept be your own bank. They actually are able to score points that way because they made that 84,000 before it was gone off to pay bills, grow them something. It grew them interest. Second component is because they're using the credit system the right way. They're building strong credit every single year. And over that time, many people tell you you're not going to get rich by saving money, but people that understand how to save money and also create great credit scores and FICO scores and debt to income ratio is intact, they're the ones who always will be able to catch opportunities when they come. And you actually just have to have cash and great credit scores to be able to create opportunities when they come. And that's how people are able to build wealth, if that makes sense.
Yes, it does. Yes, it does. I'm so excited about the opportunity of being able to empower, even those insurance agents that have been around for so long or been around or just joining the industry. And, they are trained, in this insurance equals death. And so the transformation that you've been taking us on, I really understand and appreciate that you're shifting our mindset as relates to money. One of the things I've heard a, um, a lady at an estate sale, she said to me, she says, African Americans have not been taught, as Nico, very well came in with that introduction and said that we were not taught as youth, as kids to understand money, let alone understand wealth. All you know is that the bills get paid. And so one of the other uh, learned behaviors was you go to school, get a good education so you can get a job, graduate and get a job, and so you can retire. That's not the model anymore. So being able to create wealth, which says Deuteronomy 8 and I believe 18 says God has given us the power to create wealth. He's given us the insight, the download. But what we do with that and how we get it is still the mystery. And I think it's because of the lack of wisdom and understanding that that has not in the past been available. So, Chris, thank you so much for making yourself available to help us journey into understanding how to position ourselves for wealth. I'm gonna bring Nico on and just to share some closing thoughts about wealth building, about even maybe if you have just a mini illustration of something that you had to overcome, and maybe a client or something that you could just share a success story on how they were able to benefit from what you were able to offer. If you don't mind sharing that, so Nico, you go first, then Chris, and then we'll wrap it up.
I think the biggest thing that I learned over time is for your credit card payments, always set up on automatic payments. Always. And you set it up for your minimum payment, and then you can always go in and pay whatever. Remember, we talked about that statement period. And I only say that because I had a deal that almost fell through because the client was just, doing like I asked her to do, which was to keep a balance on a credit card. And her balance was $5. She forgot to make that payment.
Oh, wow.
It dropped her score 60 points.
Oh, wow.
So it took a lot of prayer and begging
Wow.
Them to because you don't think about $5.
Yeah, yeah. Like,
So if you take anything away when you're dealing with your credit cards, and I always say do things on credit card, pay the credit card.
yeah.
And then that way you're not double dabbing and double paying, and that way you're taking your liquid cash
Mm-hmm.
and you have that money saved. And Chris, of course, touched on that as well. But always set up your credit card payments on automatic payment for the minimum payment.
Mm-hmm.
And then you go in and make whatever additional payments. And then you don't have to worry about those oops, because your payments are always going to be due at a different time. We saved the deal. She
Mm-hmm.
did move into her home,
Okay.
but that was a costly mistake because with those 60 points, she no longer qualified for that house.
Oh, wow.
So that's very important. Make sure you're setting up that minimum payment. And like Chris said, pay your bills with your credit card and then use that money to pay. And that way you always have that liquid cash, which is important.
Man, talking about financial breakthrough. This is definitely a financial breakthrough. That's another great nugget that I just wrote down. I'm putting mine on automatic pay tonight.
Yes.
Yeah, because I'll be watching there. Send me a little text. Your bill is almost due. They'll send you a little notification. But what happened if I miss it or something else is going on?
And life happens.
Life happens. Yes, it does. Absolutely. Yes, it does. Chris, any closing advice or anything you would like to share?
Yeah, honestly, this is what you call the art of building wealth right here, because these concepts. I give you the scenario. If you're building a house, you first gonna have to start with location, where you want that house to be built,
Mm-hmm.
and sometimes it's for people to think about what they want their life to look like, and that may be as simple as understanding, like you guys are in the Houston area. Oh, I want to buy a house in Katy. I want to
Mm-hmm.
buy a house in Sugarland. You got to know where you want to live. Second part of that is actually getting the blueprint. Getting the blueprint. And then from that blueprint has to be shared with a construction team, and that construction team is going to consist of your carpenter, your electrician, your plumbers, all of these guys, masons, all of this. Now, in the scenario, to play apples to apples, if this makes sense, to like give you a good analogy, that's the exact way that people have to run their financial life. And your construction team to build your financial house is going to consist of a great credit professional, not someone you see once in a lifetime and they get your credit score to 720 to buy a house and
Yeah.
boom, you're done. This is someone you have to have routinely if you're trying to build wealth, right? Because honestly, let's say you're going to build wealth through acquiring real estate properties. It's not going to be a one and done scenario. You need to advise that person and make sure that person is working throughout anytime you're making these types of transactions that you're looking to build your wealth. So credit professional is going to be very important. In addition to that, having a good tax professional is going to be a part of that team, right? A great tax professional who's going to help you. And to be honest, I don't want to beat tax professionals up, but some tax professionals are very long in the tooth and they are not really willing to learn the new tactics that exist today. And sometimes you'll have people I have as a client, and I say, go talk to your tax professional. The tax professional really doesn't want to continue to go out there and educate themselves for the next level of tax strategy. So a great tax strategist is going to be very important, and a basically a financial strategist, someone that does like what I do, is going to help you on a month-to-month basis understand how to be more profitable, what your income is, what your expenses are, what do you have left over, what your profit should be by the end of the year, right? Having a person like that. And then sometimes people do what I do and they're just a financial strategist. They're not a life insurance professional. But if you have a person that is not wearing both hats, then you also need to have a life insurance professional that's helping you with that equation. And we're not done. That's actually just four. The fifth one is going to be a good real estate team consisting of a real estate agent and loan officer. Those right there are your construction team. And I always tell
Come
people,
on.
you want all of them looking at the same blueprint.
Yeah.
Because if we're looking at building that home in, let's say, Katy, Texas, if the plumber is not looking at the same blueprint that the mason is looking at and the carpenter is looking at, then that's not a house you're going to want to live in, because if it ever gets built, it's not going to be built correctly. And you're going to have some problems. And you
Yeah.
may spend way more money getting the repairs done versus having everybody on that same team looking at the same blueprint from the beginning. And that's what my points would be to close it off.
Awesome.
Y'all are Y'all are the team, the what is it, the ateam.com, however we can say that. This was absolutely phenomenal. And Chris, I mean, you just, the whole construction team of building wealth was definitely empowering. And one of the things that I took away, that maybe our next theme for this is the art of building wealth. Um, and I believe, the reason why I have these type of conversations is because, we have been in church and ministry for so long, and a lot of things we think we can just pray and it's just going to fall out of the sky and it's just going to, going to happen. And we pray for a house, Chris. We prayed for a house. We believe God for a house. But it wasn't until I had a conversation, a real conversation with Nicole. She was like, oh, you need to fix this. Oh, you need to do this. Oh, you need to. And she said, here's the tool. Here's a tool. And until I took responsibility for where I was of not looking at my credit, and really going and saying, okay, let me go ahead, get over my own fears and face whatever this is. God began to open the door for the resources that I needed to do it. And so connected with CreditUP, and it was a process. I was like, oh Lord, here we go with a system. But they say, do this, do this, do this. Go get this credit card, click the link to go apply for this credit card, apply for it. It was in the mail 7 to 10 days. And so now I get a text today to say, hey girl, you doing good, you're doing good. And so that's the news. But until we overcome our own fears and get out of our own way, we won't be the millionaires, whether it's in finances or whether it's in equity in a policy or whether it's in a business model, until we become responsible. This is one we just can't shout it out. We can't shout this one out. So I want to encourage everybody, take this information that you got on tonight and go and get busy. I'm going to put that information in the thread so you'll be able to see that information. But I want to thank them, and hopefully they'll be back with me, if not next week, the week after that. We want to keep these conversations going, and I want to give them the platform to have a voice to actually do that. So thank you guys so much. I'm going to do a close, and then we'll see you guys next week or the week after that. Hey, everybody, we are excited. It is now time for Expand Your Ministry Brand. And I want to tell you, if you have ever wanted to really launch your own digital content, the time is now. We have an amazing teacher and trainer tonight. I'm going to share my screen just 1 second so you can see the screen. And let's see if I got this right. Let me see. No. Yeah, this is right. Okay, so going to share my screen real quick. Hopefully you can see this. This is going on tonight at 8 o'clock. In about 15 minutes, you want to make sure that you are part of this Launch Your Podcast. It is Church 5.0. Is a part of what we're going to be teaching and training as we look at where the church is going into the digital space. So these are all things that you want to consider as you look at strategies and structure, media, messaging, and market, social media management, focus group, team building, financial strategies, which we just covered a bit of that tonight. All of this is going to be a part of our Church 5.0, helping you to empower your ministry and take it to the next level. So our special guest tonight is going to be none other than Mr. Morris Parsons. And so you want to make sure you come and you join us tonight for this dynamic, kingdom elevated mindset about podcasting. A lot of people may have talked to you about podcasting and you really are like, why podcast? Well, we're going to tell you tonight why you want to do that. So we want you to go to this site. It's called KingCast Podcast. And we want you to click on register. So you'll see that it is 3 sessions. So we have this Monday, next Monday, and the Monday after that. And then you're going to get some exciting news and invitation on how you can become a part of a dynamic movement of podcasting. So it doesn't matter whether you're a preacher, teacher, coach, financial advisor, athlete, or someone that helps with physical fitness, health, wellness, whatever it is. If you're ready to take it to the airwaves and it's faith-based, we want to make sure that you have an opportunity to do that. You're going to click register there, and then you'll be able to join us on tonight. We will see you in just a few minutes. But until then, guys, God bless you. Have an amazing, amazing evening. And what I would say to everybody, go out and be the difference. Be the difference. Make the difference. You want to make sure that you're able to connect to the next of what God is doing in this movement. So thank you so much for being with us. Thank you, Nicole. Thank you, Chris. And we'll see you guys over the top. God bless you.